Hey, good day, everyone. Welcome to the Bert Salazar Show. My name is Bert Salazar, and I'm going to be your host today. By the way, if you enjoy the content of what we're about to discuss, feel free to share with your friends and family, and also subscribe so we can continue to grow this channel to a much higher level. So, without any further ado, as you know, we're a tax planning and tax resolution firm. And we specialize in dealing with clients that owe a lot of money to the IRS. So if you owe money to the IRS and you really have no idea how to overcome that or how to deal with the IRS, which is a very critical aspect of tax resolution planning, then obviously feel free to give us a call and we'll give you that information at the end. But in the meantime, one of the things that I want to talk to you about today is installment agreements. Installment agreements, it's one of the many ways that you can negotiate with the IRS. A lot of clients and many of the people that follow us on Facebook and Twitter and YouTube, they continue to ask some of the questions and that are important when it comes to installment agreements. So I want to share with you. Obviously, I'm not going to go into a lot of detail because I want this to be a short video, but I want to share with you what are some of the critical aspects of internal installment agreements when it comes to negotiating with the IRS. Now, the first one that I want to talk about today is called a short-term installment agreement, and this is one in which you're basically negotiating with the IRS to pay them within 180 days. So you have 6 months, you have a six month window to pay your debt to the IRS. And if you're able to do that, you do a short term installment agreement. Obviously, I recommend that you hire a tax resolution specialist that is going to help you walk through all the booby traps that you can find when you're trying to negotiate with the IRS. And that's something that we do in our firm. So the short-term installment agreement is one that I use from time to time, depending on the client's situation and the taxpayer situation when it comes to making those payments within 6 months. The second one is what is known as a streamline installment agreement. And this is one that if you owe the IRS $50,000 or less, and you have not had any back taxes and or any other installment agreement over the previous 5 years, then obviously you may be suitable for this type of installment agreement. This installment agreement allows you to pay the IRS within a 72-month period, so you can pay them over 6 years, which is important because it gives you plenty of time. Obviously, it depends on how much money you owe the IRS in order to make certain that you pay them. There's no financial information required. You don't have to file any additional forms, and your tax resolution specialist can definitely help you with that. Also, you have to pay the IRS either within 72 months or prior to what is known as the CSED, CSED, which is the collection statute expiration date. So if your collection statute expiration date or CSED expires over a 5 year period, then you cannot do a 72-month. You have to pay them within 5 years, because if they go over 5 years, and then obviously the IRS would have to forgive the remaining of the debt. So it's important to know what your CSED date is on the specific tax year that you owe the IRS. And that's something that your tax resolution specialist can help you with. So we've done the short term, we've done the streamlined installment agreement. Also, there's a guaranteed installment agreement. And that's easier to get or easy to get because if you owe the IRS $10,000 or less, it's an automatic. So it's a guaranteed installment agreement in which you can utilize in order to pay that debt to the IRS. There's also a business installment agreement. Now, business installment agreements, obviously, you have to pay within a shorter time. It's 24 months or 2 years. So depending on how much money you owe the IRS, the IRS will give that specific business or business owner, if it's a business, that 2 years in order to accommodate that debt and make sure that that person can get rid of that debt within a 2 year period. Then you also have the regular installment agreement. And the regular installment agreement is going to go over 72 months, but it also requires, if you are the taxpayer that owes money to the IRS, it requires you to complete financial statements, and that is Form 433. If it's an individual, it would be 433A. If it's a business owner, it would be 433B. And there are other 433s, but those are for another day of discussion. But that's your regular installment agreement. You got to show the IRS financially what it is that you're able to pay, not what you're willing to pay, is what you're able to pay. And then obviously based on those numbers, then your tax practitioner or your tax resolution specialist can negotiate with the IRS as to which is the better installment agreement for you to put in place, because it's important that you have the right installment agreement when it comes to dealing with the IRS. There's another installment agreement, which is called a partial pay. And this one, obviously, when you submit your financial statements to the IRS, if the amount that you can pay based on the IRS guidelines and rules, if it's not going to be able to pay your debt at 100%, it's going to be less than 100%. This is what they call a partial installment agreement, because you're going to be able to, based on the CSET, based on the collections statute expiration date, the IRS will determine, and you, along with your tax resolution specialist, will determine what is the most that you can pay the IRS. And if the most that you can pay the IRS, I just had a case a couple of months ago where the client owed over $60,000 to the IRS, but they had suffered business losses and they had to shut down the business and so forth. So the only thing that they could pay the IRS was $150 a month. And the CSET is going to expire in 4 years. So the IRS made the deal with the client and with me as the representation of the client, to take the $150 a month, because they would rather take something than nothing, because, the expiration date was going to be very close, and the client did not have the financial means to be able to pay the entire debt over that period of time. So it's something that is important to note. You have to understand the rules of engagement. You have to understand the deadline for the CSET, and also the better job you do in your financial statements, the better off you're going to be. So whenever you're putting together a financial statement, make sure that you're working with your accountant or tax resolution specialist, because if you try to do it yourself, the 433 form, it's a form that is intricate. You have to do it the right way if you want to maximize your opportunity with the IRS. The IRS also has something that they call the 1 year rule, which means that, let's say that you submit your financial statements and you can pay, based on the IRS rules, you can full pay your installment agreement. But because of, let's say you have a very expensive automobile that you're paying for, the IRS only allows so much per automobile. The 1 year rule basically means that the IRS will allow you, as the taxpayer, up to 1 year to reduce your monthly out-of-pocket expenses, your monthly debt, in order to satisfy the IRS rules and make sure that you continue to pay the IRS at the higher level. So they do have the ability to work with you. Once again, your tax resolution specialist will be the best person to help you along those lines, because if we can build a good argument on your behalf, we can buy a year for you to start reducing your debt. So if you're leasing an apartment and you're paying $5,000 a month, and the IRS only allows, $2,200 based on the geographical area that you happen to be in, and that's another critical aspect of it, then the IRS will give you a year for you to satisfy your lease or find a new rental property that is going to be a lot cheaper than the one that you're in today. So that's important. And then obviously the last rule that I want to talk to you about is the 6-year rule. And this is the one that the IRS will give you up to 6 years for you to pay all your debt to the IRS is 72 months. So those are pretty much the installment agreements options that you have available. Now, there are a number of other things that you can do when negotiating with the IRS. There's one called a CNC, which is currently not collectible if you're going through financial challenges, you're not able to pay the IRS. You may be able to place things on hold along those lines. You also have an offer on compromise. You also have the ability to file bankruptcy, which sometimes is recommended, although it may not be a really good thing in the long term. But at the end of the day, is one of the suitable options. Always remember that when you submit an installment agreement to the IRS, your collection statute expiration date is going to freeze. It's not going to continue to run because while you're in the process of submitting your installment agreement, or you have already submitted your installment agreement, and the IRS is reviewing the installment agreement, they cannot collect on that debt that you have with them. So by the same token, they cannot collect on the debt, but they're going to stop the clock until they're able to collect again, or until that time that they reach an agreement with you from a business and a tax standpoint. So for those of you that may be interested in reaching out to us, you can reach out to me again, Bert Salazar, and that's BERTSALAZAR. You can reach me at area code 304-4770. You can also send me an email at Bert, B-E-R-T, at Gables, G-A-B-L-E-S, taxgroup.com, and we'll be happy to schedule a call with you. It will be a confidential call, and we'll be more than helpful in answering all the questions that you may have if you owe money to the IRS. Bottom line, if you owe money to the IRS and you start to receive letters from the IRS, don't put the letters in a drawer and forget about them, because the IRS is going to come after you. They can garnish your wages. They can put lien on your properties. They can do levies. So you have to be on top of everything that you're dealing with when it comes with the IRS. So with that being said, I don't want to take any more of your time. Please don't forget to like and share and subscribe to our channel if you like the content that I have provided for you. And I'll talk to you soon. Take care, and you have a great day. Bye-bye.